Big Picture segment, and today we have a very special guest, Vijay Kedia, Managing Director of Kedia Securities. He's very popular with investors because personally he's also been a great investor both in terms of identifying multi-bagger ideas and also identifying some themes. So Vijay, fantastic to have you back and thank you for joining us.
Thank you.
Now I was scanning through your Twitter account over the weekend, and you've been quite bearish for about 5-6 months now. Your tweets have been indicating that there's a party in the mid-cap space which had started in the month of November, December and Jan, and the party had to end. So if your view was bearish, how come you've not raised cash? Because as per my understanding is that you're fully invested in this market. So you've been talking bearish, but you've not done something which is in sync with your thoughts. Exactly. Your action has not been in sync with your thoughts.
You know, Nikunj, the thing is this, that I remember one dialogue of old Hindi movies where the gangster tells the hero, तो बरखुदार हमारे गैंग में आना तुम्हारी मर्जी से, जाना हमारी मर्जी से है. So yeah, something like that. So my investment in market actually does not, the exit does not depend on my own wish. Okay. So because I am mostly investing in all illiquid stocks. So until unless the performance of my company and the performance of the market is not excited, I cannot get an exit. So this is the first thing. And secondly, in my entire career of say 30 years into investing, I do not remember any single day when I was actually in cash. Even if I sell some shares today, I cannot hold the cash in my bank maybe not more than 5 days, 10 days or maybe a month. So I am okay, I am happy about it because you can say that cash is enemy for me. And it reflects in my spending habits also. Suppose if I have 5,000 rupees in my pocket and I go for shopping, so that 5,000 rupees will be spent.
No, but suffice to say that by making that or having that sort of stance, you're not putting incremental cash in the markets at these levels because you're bearish, but you're fully invested still.
Fully invested. I do not have cash, only to feed. That's it. I do not have
and
cash.
shop. Okay, but you know, given that the magnitude of the fall has only gotten accelerated in the last 2 months, that's February as well as March, how is it that 6 months back you actually saw those signs and indicators that were reading that there is a correction in the coming?
No, because it's a very set pattern of investing, you know. What happens, I will give you one example. Whenever the boom in real estate comes and it is about to be over, that time what happens? The clerk who is working with the real estate agent, actually he becomes agent. And the real estate agent, they become investors. And the investors become developers. And once they become developer, that means they are God. Then the God who is sitting up, actually he doesn't like that story that he has become God only. So the downturn starts. Same thing happening in the stock market also. Sub-broker becomes investor, investors become consultant, consultant become fund managers, and fund managers becomes God. Then you know what happens. So all these signs were there in the market. It does not mean the market is going to fall further from me. I'm not saying that. Because one thing which I did not like in the market was the euphoria. So what I felt that the euphoria should die down doesn't mean that stock will go down 20% or 30%. It depends on stock to stock. But the sentiment had become so excited that people have really become blind. If you talk to somebody about that market is going to fall on Twitter, they will actually come biting you. So all these things actually I realized that maybe this is the time that market should go down. Although I was invested 100% at that point of time, even this point of time also I am invested 100%.
If you had an option to, let's say, create a leverage position and invest right now, do you think this market is looking attractive? Again, you're fully invested, but I'm sure you've got capability to raise cash, borrow cash, and deploy back into the market. Are you smelling and spotting that kind of an opportunity where you want to go all in?
You see, it depends on what is your approach to the market. If you are investing in a business, or you are investing in the market, or you are investing in the stocks. If you are investing in the business, then I don't mind, which is my approach. Then I don't mind borrow the money and invest into a stock. Provided my horizon is for 10 or 15 years or 20 years, which I am talking about the long-term investing. But if my approach is to invest in the stocks or the market, then actually I think I need to ask my astrologer or my technical chartist where success rate is 10% or 20%.
No, the reason I ask you this question is because we have a common friend, Rakesh Jhunjhunwala. And what Rakesh Jhunjhunwala often has claimed on public platforms is that when he spots an opportunity, he bets on that stock or that idea disproportionately. In your case, when you identified Atul Auto, or for that matter, when you identified Sarah Sanitary, you aggressively bought into those stocks. You were owning 5, 6, 10% equity in the company. So after the recent fall in the mid and small cap space, are you convinced that the stocks which you own, you are happy to double them, leverage them? You may be fully invested, but that does not stop you from deploying additional cash by borrowing capital.
Or, booking profits in some stock which you think you've, run your target on.
That might happen. I can book my profit any day. That I myself, I don't know. And so far borrowing is concerned, I don't think that market is so cheap. What you are talking about, Rakesh actually made this statement maybe in 2013, when stocks were very cheap. Now market is coming to that level, at a reasonable level. When I bought whatever stocks you are naming, like Atul Auto and all those shares, they were available dirt cheap at P ratio of 5, for example. So I don't think this market is so cheap. So I'm happy with whatever I am holding. If I stay put, if I keep on holding to those stocks, I am happy with that.
But some of your profits have come down obviously from the top, which doesn't worry you at all. You believe that it's a market, it will eventually go up and the losses will be made up for.
See, worry
Notional.
and investing, that these things go together. Okay, so profit is coming down, my age is also coming down. So what can I do about it? Nobody can do about it. And this is what one should always understand in this market. You are investing. If you are into investing is a stressful business. Okay, blood pressure and diabetes, they are early visitors, to an investors. So the moment you come out from all those things, that it doesn't worry you. All these shocks and downswing in the market should not worry you at all, because otherwise there is no point of your success. If you are not having a good health, if you are not happy, if you are not having peace, then what is the purpose of your millions?
But Mr. Kedia, I think we still need to come back to the point that you are sounding a bit cautious about the markets going ahead, and for your hundreds and hundreds, thousands of followers out there, they'd be saying, what are the signs that you are seeing to make that call, and in lieu of that stance, how are you managing your portfolio?
No, as I said, this market is not very cheap. And I expect this 2018 to be very volatile. Okay.
Why?
Because of various factors, maybe because Trump and Dump and maybe trade war, maybe Indo-China relation, and so many things are there. So that does not mean that I will sell my shares and go to Rajasthan. That does not mean that. Okay. I am staying put. I will hold my shares. But at this point of time, I'm not comfortable in borrowing money and investing into the market.
No leverage.
No
Okay.
leverage.
I just want to
Vijay, we've got Mahabaleshwar MS, the MD and CEO at Karnataka Bank, also on the line with us. Mr. Mahabaleshwara, thanks so much for taking the time and speaking with us today. We've got renowned investor Vijay Kedia here first in the studio. So I'm going to first go across to Vijay and find out why Karnataka Bank.
You've sold your why did you bought Karnataka Bank, and why have you sold your position in Karnataka Bank by about 40-50%?
Okay.
You said you have not sold anything, but in Karnataka Bank, as per the BAC data, you've sold 30-40 lakh shares.
I'm not 34, don't remember, but I'm still holding more than 1%. So glass is half full or glass
So yeah,
is half.
why is it that you like this story?
No, because of the environment. I realized that as we all know that bank, the word has become a dirty word. Okay, I think there is an identity crisis into the banking sector.
Yeah, well put.
Yeah,
there is.
Yeah, there is. So I thought every quarter this problem of NPA is not getting solved. And since the stock was liquid and I had opportunity somewhere else, so I sold some of my shares with an expectation that if the stock price will go down, or even if it doesn't go down, I will buy again. But right now I don't know when will I buy or I will not buy. But whatever I am holding, I think I will hold on to those shares. And why did I buy? Because of course it was one of the cheapest banking stock in India in private, so far private bank is concerned. And I have full faith in this management. Even the new management is doing wonders. You can see whatever the if you have gone through the press release which came yesterday. So they have done exceedingly well. So maybe they have some hiccups, some short-term issues which should be solved very soon.
Okay, Mr. Mahabaleshwara, good morning. Thank you for joining us. Now, Mr. Mahabaleshwara, when I spoke to you last, you were very confident about your Vision 2020. But given that you got new norms or new NPA provisioning norms which have come from RBI, credit offtake has not been great. In general, I'm getting a sense that banks right now are reluctant toward giving aggressive credit both at MSC level and at high corporate level. Do you think you would like to revisit your Vision 2020?
I'm very much optimistic about the long journey that we have already undertaken and the results are quite visible. See, this is almost now 1 year into my office as MD and CEO of the bank. And during the very first year, whatever the business target that we had set for ourselves, that is 1,10,000 crores of business, that we have been able to accomplish. And here we have been able to achieve a growth rate of 17.82%. And the most noteworthy is that the growth in advances. We have been able to clock a growth rate of around 28.54% in advances. And my CD ratio has also gone up from 65.22% to 75.65%. Most probably the industry might have grown at a rate of around 8%. That being the case, when a bank grows at 17.82%, that too keeping all the quality parameters intact, I'm really expressing my happiness about this growth. And I also believe that this must be sustainable from the point of view that we have been able to focus not only on the corporates but also on the mid corporates and the retail. So, and the CASA is also growing. And most interesting thing is that during the last financial year, that is 2017-18, we have been able to onboard 1 million new customers. So this has not happened in the history of Karnataka Bank. More and more new customers onboarding is happening on daily basis. And this opens up a lot of cross-selling opportunity for me. So having completed the first year in a very satisfactory note, we have now been aiming for around 18% growth during the ensuing year, that is 2018-19. The business turnover I am aiming to have at around 1,30,000 crores with a growth rate of 14.5% for the deposits and around 20% plus for the advances. So that would help me to have a very good operating profit in the year to come. And definitely during the current year, as I have already made known to all, that there would be some NPA pressures, provision pressure, everything. But the future appears to be very bright for banks like Karnataka Bank.
With the story, or would you have a question for Mr. Mahabaleshwara?
Yeah, of course. I am convinced with the story, and this is what I believe ever since I am invested in the bank. So, hello, good morning, sir. I just want to know one thing from you. First of all, congratulations for your press release yesterday, and whatever the numbers actually you have given, that is really wonderful. So, one thing I would like to know from you. As on December 2017, actually your restructured assets was somewhere around 970 crore, and your SMA2 was somewhere around 1200 crore. So altogether 2200 crore. So as per the, yes sir.
Thank you, Mr. Kedia, for the confidence reposed on Karnataka Bank. You are a well-informed investor, and your confidence really goes a long way in furthering our business initiatives. And as far as your specific two questions, one is I think on our restructured advances, which was at 970.38 crores as of December 17. And you may be aware of the fact that as of March 2017, this was at 1,365.15 crore. So in all probability, no addition to the restructured advances portfolio, and I'm very optimistic that it would come down. And as far as the other portfolio that you have mentioned, the SMA2, we had about 1,218.24 crores as of December 17. And again, in the SMA2, the additions are quite less. The probability of addition appear to be quite less because on account of the recent RBI stressed asset resolution plan issued by the RBI on February 12th and other, there could be some migration from this SMA2 portfolio to even to the NPA portfolio. And as a result, however, there may not be fresh addition to the this portfolio of the SMA2. What I am seeing is that once we pass this Q4, the asset quality pressures may ease out. Even though the operating profit appears to be on a robust line, definitely the bottom line stress across Indian banking industry may continue for this particular fourth quarter of the year 2017-18.
Mr. Mahabaleshwar, that's interesting that you highlighted, those parameters. I was just looking at your return ratios, return on assets, return on equity over the course of the last 4 years and, for the 9-month period ended FY18. There has been a decline there. What are you doing at your end to improve the performance? Because, these are really the benchmarks against which investors would evaluate you.
Yeah, on account of especially the pressure on the provision front, ROA may also experience some pressure, but we are also optimistic of about a decent NIM during the current financial year.
Okay. Just before we let Mr. Mahabaleshwara go, Vijay, does it not worry you the fact that bank, the word itself is becoming so tainted? It may not be Karnataka Bank, but because of what's going on in the sector or with a particular bank or two, that's having its rub off or shake off, I should say, on the rest of the banking stocks as well. Do you not worry about your net worth going down, cracking every day in Karnataka Bank in particular?
No, actually, I do not count all those numbers because those are numbers to me, as I said earlier on Twitter also, that your unrealized profit in a stock is actually money borrowed from the market. So until unless you book your profit, the money is not yours. Okay. So all those things does not worry me at all. And I'm confident because this is the worst time for the banking sector. So this could be the best time
for a fresh investor.
Yeah, to investor to invest in banking sector.
So would you look to add more? Maybe not in a Karnataka bank, but just banking per se?
Yes, of course. Although I do not have money, but suppose if I sell some shares tomorrow, then I would certainly put my money. I may put there is no certainty in the market. Let me tell you. So I may put my money into bank, and why not Karnataka Bank? Because I think now at this price. Anyway, I don't want, it's not a recommendation, so let us not talk about the price and all.
Sure.
But I think it's reasonable, it's cheaply valued, it's the cheapest bank available. Although price may go down 10% from here also, again some scams breaks out tomorrow that we don't know.
Yeah.
But otherwise, value-wise, I think it's one of the cheapest banks.
Okay, so before we wrap, I'll take some Twitter queries also, but I just want to bring out your portfolio and whatever is there available to us in the public domain. Sudarshan Chemicals, Vaibhav Gems, Everest Industries, all public information which we've picked up from the BSE reported data. Have you increased or reduced your exposure in 3 large holdings? I think your 3 large holdings, according to public data, one would be Sudarshan Chemicals, one could be Karnataka Bank, and the third one I think is Vaibhav Gems, right?
Yeah, or Repro or whatever.
Repro. These are top 3 large holdings.
Yeah.
As of now, you don't see a reason to sell them or to add more, and you think that you are fairly committed to your top 3-4 holdings for next 2-3 years.
Yeah, as on today.
Would you be selling them if they increase 100% from here? Your top 3 holdings?
100% from here. Depends. If 100% it rises about tomorrow, then I can sell. I can think. Otherwise, I'm happy with that. As I
so
said,
this is Vijay Kedia's 2020 portfolio.
This is very difficult to say. Let me tell
as
you,
of today.
because last year I was expecting that I was not sell my Karnataka Bank for 5 years. I'm giving you one example. But I changed my mind and I sold some of my Karnataka Bank. So I think that kind of, it's futile.
No, as of today. What happens tomorrow, we don't know.
But I'm happy with my portfolio. Actually, I'm watching them very closely, and I don't think that I need to sell any of my
There's
stock.
no immediate reason to sell, is what you're saying. On that note, we're going to thank Mr. Mahabaleshwara. Thanks so much, sir. It was great having you on the show and you interacting with one of the fans of Karnataka Bank, Mr. Vijay Kedia. He's convinced about your story, and he's also convinced about the valuation, and his message to fresh investors is there that there can't be a better price to buy Karnataka Bank at the current levels. Good speaking with you, sir.
Thank you. I think the growth story will continue. Thank you.
Okay, great that you maintain that kind of conviction. I'm sure market investors will also follow that. Vijay, also a couple of questions on Twitter. Shivansh wants to know what are the prospects of HFCs as well as the liquor sector. You can take your pick. What do you want to answer?
I like to have liquor, but not the shares.
Do you like to invest?
But not the shares. Not to invest because those are very expensive. So that is not my cup of, not my glass of peg, peg of glass, whatever. It is not my cup of tea. So far liquor stocks are concerned because very expensive. And so far HFC is concerned, HFC, of course, I think the story of HFC is going to remain there for maybe for a decade or so. But HFC business is becoming like a commodity because there's so many small HFCs companies are coming. So I don't know, from investment point of view, you will get a multi-bagger into HFC. That I have my doubt. Earlier I was
bullish. A bit
bullish.
of a herd mentality coming in there. The differential between each business is kind of getting eroded.
Yeah, and margin in HFC is very actually low. So that also one should remember. So although business will do well, but as an investor, we will multiply our money or not, that is questionable.
I have, yesterday when we were doing our Facebook Live, we got a lot of questions on ICICI Bank and Axis Bank. And I mean, I don't want you to be, if you can, you may perhaps give us your verdict of whether you would invest into these banks. But the question really is that, is this fall an opportunity? If you're saying that the so-called banking crisis, as it may be called, is only going to throw up opportunities in the near term, then is ICICI and Axis Bank, are they candidates also to be viewed in that light? Or is it, it's because they're large cap names, because they're over-invested stories, because they're well-explored stories, you would stay away?
Exactly. Because of those reasons only, I will stay away from them, because it's very difficult to understand ICICI or
And what would you tell your followers? Because a lot of them are asking me this question, should we buy ICICI Bank and Axis Bank?
No, I cannot speak about ICICI Bank or Axis Bank because since I do not have any view on those shares, but I would say invest where you understand the story. If you understand the story, then only you understand.
Do you own a Nifty 50 stock? The reason why I'm asking this question is you would say, look, you're looking at disproportionate returns, and a Nifty 50 stock may not give you disproportionate returns from these levels.
Yes.
But which is a good Nifty 50 or a large cap business which you like? You would say, look, I'm not going to invest my money in it because I'm in for identifying multi-baggers, but I like this company, I like the business, I like this management.
See, remember what Uday Kotak said yesterday or day before yesterday, that the ratio between PSBs and private is 70 and 30, which is going 70 or 30? Or
70-30. 70 is with PSU banks, 30 is
PSBs,
private banks. That could become 50-50.
Yeah, which is going to come down 50-50 in 5 years. So that is a big opportunity. There's tremendous opportunity. So one have to choose wisely which stock one should invest into.
Okay.
Yeah.
Appreciate your time. Thank you for joining us. When we do a panel discussion, Aisha and Tanveer always have the last question, the last word. So ladies.
Continue to be the smiling investor that you are. That's all that we got to say. A lot of other Twitter queries, but they were all getting stock specific. So we'll leave it for some other day. Good speaking with you, Vijay.
Thank you.
Thanks so much.